The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We'll take a look at the German DAX and the FTSE like we always do. And then, of course, we want to take a look at that little quote from Confucius, which I really enjoy. I've been a fan of his for many years. He was back in 600 BC, right before I started trading, but I've been to Beijing where his home was, and it's really been in disarray, but they've really, in the last 6 or 8 years, I guess, they've built it up to, to a place like it used to be. It was an incredible state back in the 6th century BC, but he mentions, by 3 methods we may learn wisdom. First, by reflection, which is the noblest. Second, by imitation, which is the easiest. And the third, by experience, which is the bitterest. And boys and girls, that's how I learned, through the school of hard knocks. Now, I have talked about this secret trading plan that I use. No one knows about this, folks. This is a total secret, so don't go sharing it with anybody. I'm just going to continue on where we were the other day. You can see the big ABCD that ended down there at 103. You see the market rallied up to that Fibonacci number of 0.618, and then it came down and made the 78% retracement, and then it went up and made the 62% retracement again. Folks, please don't share this with anybody because it's a secret. Nobody knows this kind of stuff, so don't share it with anybody. However, I did get something today from the Prince of Calabria, Italy, sent a beautiful chart on AMD, and I want to send this to our good friends out there and thank Enzo for bringing this to our attention. This is AMD, and if you'll notice here, these swings that he has, I'm going to blow them up here. This is a 4-hour chart. We're going to go down to an hourly chart to show you what he's doing because he picked up on this secret trading thing, and it's actually working really good in one of the most famous of all the chip stocks. Just a second, boys and girls. We have a slight problem here. There we go. I'll get it fixed, and then we'll be all right. Move this up here, and then we'll move it down to an hourly, and you can see that. The key to this, folks, is if you just look at the ratios there, but the key one is that 382. That's the one that we're looking at in the NASDAQ when it was trading at 11,550. And so those are some of the things that you want to do this. Folks, if you're just getting into trading, for God's sake, stay away from the stock indices, okay? Stay away from silver. Stay away from gold. First of all, you almost have to because the margins now are up to around 15,000 and everything. So you have to be a little bit careful. But pick something like Apple. Apple's no longer trading for, what was it, 800 or 900? I don't even remember what the price was, but now it's trading for 100. Was trading for 400 and change. Now it's trading for 100. Look how easy it is. I wouldn't recommend oats, Marshall, but oats does work okay if you like to trade oats. I mean, that's just like any of the other grains. But pick something like that, where the margin's okay. Remember, we talked about soybeans the other day using that same secret trading plan that no one knows about. Take a look at this. Is the November bean contract. We make a perfect Gartley up there at the 1038 level. We go all the way down. We drop 38 cents. And look, we go sideways here after we made the ABCD, and we couldn't get any higher than a nickel off that bottom, and now we're trading at 9.95 tonight. That means that ABCD pattern has failed. So this is one of the secret ones that when it fails, the secret to this, folks, is when you're doing this is you don't take the losing trades. That's very, very important. You only take the winning trades. If you have trouble figuring that out, well, then you're going to have to go to stage 2 of the learning process to figure that out. But you don't want to take the losing trades. Remember Warren Buffett? He says, do not lose. And the second, there's rule number 1, and rule number 2 is don't break rule number 1. Well, you got to keep your losses as small as possible, but that's the key to what we're watching in here. Today is a very special day because we have Bill Meridian, Cycles Research, on. He's got about 20 slides that he's going to share with us, and some of the stuff that he shared with us last month was just absolutely spectacular, and we certainly want to get his opinion on what's happening in the gold market. Gold is getting very, very close, boys and girls, to that big number we've been waiting at for a long time. I want to get it down here. You'll be able to see we're really close to that 840 level. We got down to 852. I still think we're going to get there, so let's just be safe. This has been a big week for the down move in gold, which we were expecting both of that in silver. Silver broke $2.50 the other day. In fact, got all the way down to 2170, shattering the 382, which is not a good sign, but right now it's trading right near the 382 of the whole move. But frankly, with a Friday like this, I would prefer to wait and see what's going to happen here at the first of the week. So we're not going to be doing anything in the silver or gold today. We want to wait and see if we get down to those levels that are pretty interesting. The fact that we've been down 4 weeks in the stock market, they really haven't gone very far down. I mean, that's a pretty constructive sign. Now, we could go 6 weeks, 8 weeks, or 10 weeks down. We don't know. We haven't had one of those since Hector was a pup, and that dog's 9 years old now. So this market's been very, very bullish, but it doesn't always stay that way. So we'll have to be paying close attention to it as we walk through these things that we're watching at each day. One of the markets that someone has asked me about, and that is the euro. Folks, the euro has made a major top, in our opinion, i.e. major bottom in the dollar index. We have talked about that, oh my gosh, so many times. They're basically blue in the face. We made our first major correction here last night, and today we made the same low down here at 116.50. We're down 8 days. That means we're very oversold. The probabilities are that we're going to get a little bit of a rally. We got a 70 pip rally last night, which is the harmonic number in the euro, went right up to the 1.170. That was just about, what was exactly 70 pips off the bottom, and then we come right back down and tested it again. This is going to be the key here, folks, because if we fail here, this is going to tell us that that U.S. dollar index is getting ready to really soar. And if it's not going to soar, then this is where it's going to gain most of its traction, I believe, here. And that's my opinion, just looking at, the number of days down in the ABCD move, and that's, how to determine what the probabilities are if it's going to hold at. That was very good to us. We picked up 450 pips in that, which is pretty good, and we'll see if it's going to continue on like that. But we've had a big move in some of these things, and we certainly don't want them to, get out of control here. Here's where we are here, folks, just to show you what the potential is for this U.S. dollar. Let's just get this up here and take a look at it. Go back in time, 9-10 years now. Oh my gosh, I can't believe it's that long. Tom O'Brien was talking about King Dollar when it was trading at 73. There's a big ABCD pattern in there. You'll notice we went up, pulled back to a 50% retracement back in 2014. Off to the races. We made a big double top that we talked about quite a bit. And now we've come down and made a 78% retracement of the move that we started back in 2015. And it's held pretty nicely. We're now trading close to that 95 level. So that tells us that we have changed a little bit. But, folks, anytime we would reverse in this U.S. dollar, and it could happen at any time. There could be an announcement or who knows. 877-927-6646.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we're talking, I believe, with Bill Meridian, Cycles Research. Bill, are you there?
Hi, Larry.
How are you this morning, my friend?
Okay.
Bill, I have a quick question for you. Yesterday, we had one of your buddies on, Arch Crawford, and he told us how he got started in the astrology part. One of our questions this morning is, how did you get started doing the astrology? Because you've been doing it, 50 years? So, I mean, how did you get started doing it?
I started in 72.
72. Well, there you go. 48 years. How did you get started doing it, Bill?
Well, I studied astronomy as a boy, so I had a very good concept of space. Distances of planets, where they were, their names, and all of that. And I always wondered whether they had an effect on the Earth. And through Arch, I found out about the foundation of the study of cycles, which we've brought back to life. And I joined, and Ed Dewey listed all of the stock market cycles. And it was 18.6 years. I said, well, that's the period of the lunar node. 9.3 years, that's half that period. And, the stock market cycles were about equal to planetary cycles, so they were fractions of it. So I wondered if there could possibly be a link. So I had my horoscope cast by two people, and one of them said, I'll tell you one thing, you'll never inherit anything. You have Saturn and Pluto in the 8th house. I said, well, that's kind of crazy. My father was worth about $20 million in the 60s when that actually bought something. And my father lost everything by the mid-70s. And so I was impressed by this prediction and started to take lessons for 2 years here when I lived in New Jersey. Then I went to New York, and I was completely blown away by John Townley and especially Charles Jane, who was the greatest technical astrologer of the last century. He knew everything. He had practiced just about everything. And so I had superb teachers, and I had no interest whatsoever in reading people's horoscopes. But if you go to take lessons, you become fascinated, you become hooked, and you meet people who are experts in a detail of a detail of a detail. And that got me started. And then, of course, the question was, do these planetary cycles relate to the markets? And so, with Rob Hand, I designed that program in the late 70s. And with Rob Hand, we came out with Astro-Analyst in the 80s. And that's been it.
Wow.
And
Bill,
in
I don't know if
between,
you remember this or not, but 1987 in Chicago, Victoria Martin and you both
yes,
rectified my birth times at
yes,
11:50 p.m. because we didn't have
yep.
any birth certificates. The hospital records had been destroyed when the hospital burned down, but both of you came within 5 minutes of each other. My aunt said, I don't remember exactly, but it was right before midnight, and by golly, that was pretty good. And you did that from my chart, which to me absolutely blew me away. Why don't you go ahead and talk to us
Well,
about
first of all, let me just say Charles Jane was the master at rectifying charts. He did it for 53 years, and it's a lost art today. So anyway, current situation is, the market, nature doesn't give up its secrets so easily, and the market's being a bit mischievous now. That I called, if you remember, I called for a correction in September.
You sure did. Starting September 3rd, we had you on right before that. I remember that. Yes.
Yeah. Anyway, that's September's in years ending in 0 that are also election years have only been up, I think, 1 in 6 times. Now it's 1 in 7. So that really, if you looked at the market, it was certainly vulnerable. But looking at the internals, I said it's the technology that's going to get hit the hardest. The rest of the stocks, like I'm holding stocks in my portfolio that aren't down very much. They're down 3 to 5%. I'm still holding them. They're not technology. I sold all the technology. So I projected a low. I thought, well, what do you know, the obvious place to look is a 38.2% retracement of the prior move. So that would put the market around, did I say 3150 or 3050? And it's not quite there. We're about 150, almost 200 points from there. And I have a projected turning point for today, which is why I'm happy to be on today. That was in my letter. I said the market will probably bottom around this date, and we're at that date, but we're not nearly at the price level. So the market has come. We'll see. I have the graphs coming up. But the market has come down A, B, and it started the C wave, and that's where it is right now. So it should be plummeting. And the horoscope set for the day for Monday is very bearish. So I am short currently. Part of it is to hedge the portfolio. Part of it is to make a profit, and that's where I'm at. And, but according as we're going to see, all the cycles turn up. So I think we could be at a low here. But can we move on? I've got the. Do you have page 3 up?
I have page 3 up. Yes, the September ending rally, and yeah.
Yeah, let's go to the next one. And as I always like to say, in the 80s there was a saying in New York that cocaine is nature's way of telling you have too much money. And these outrageous prices for collectibles, again, I feature these in my reports. Signs of excess. Here's a $10,000 note. They used to make $10,000 notes, and
wow,
that is a $10,000 note that just sold for $384,000, a collectible. See, the collectibles market, the money. Yeah.
I have my daughters each have $1,000 and a $500 note that I got for them way back in the 70s at face value with McKinley and Cleveland on them. So they're probably worth quite a bit more than face 2 then, aren't they?
Oh, yeah, I would say so. And if you go to the next page, here you go, is an 8-inch tall vase, just like the one from the charity shop. It went for $746,000. The money has got to go somewhere, and the point I'm trying to make is no wonder the market's up. Everything is up. I mean, think of something that's not up. And here's a nice addition to anybody's living room. It's $6 to $8 million. You can have a Tyrannosaurus Rex skeleton at Christie's in New York, October 6th, and his name is Stan. He's 40 feet long and 18 feet tall.
Yeah. What they don't tell you, it comes in 1,800 parts. You have to put it together.
I hadn't thought of that.
No, they had it on. They had it on this one of the TV shows that's for sale. But you got so many parts to put it together. So anyway, that's what we're looking at. Sorry, Bill.
Yeah, sure. But go down. But in New York, Manhattan inventory set a record in August. People, I guess you've seen it on the news. They have a new moving service where you move and the people leave and the mover comes and gets the furniture later. That's how fast people are exiting New York. Wow. And they actually painted on a street, I don't know if this is in the news, F the mayor and the governor. They painted huge letters on a street so you could read it from the sky. And business leaders, they took, I think they had a full page ad or an open letter. They're calling for the mayor and the governor to resign. So That's what's happening in New York. I never thought I'd see that. So anyway, to move to the stock market, well, here's what I said earlier. From 1885 to the present, September, all months, 48.5% up. September's in years ending in 0, 38.5. September in election years, 42.4. September in both 0 and election years, 16.6. So that number is now even lower because now it's 1 in 8 or so. So let's look at the S&P. And here, this is a good picture. You see at 3050, that's the 38.2% retracement level. That's where we should be, and that would lead to a proper C wave. You see A, B, C, and we have to sell something here.
Yes, we do. We'll be right back with Bill Meridian Cycles Research, folks.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Bill Meridian, Cycles Research. Bill, we were talking about this 38% retracement that we're seeing here in the S&P that we haven't quite hit yet, and you're saying that you believe that we're in some type of a bottoming formation now, with Monday being a very negative day? Oh dear.
Just to make this count real, I kind of doubt that's going to happen. So this may be some sort of shortened or truncated C wave, which would really surprise me. But then again, you have to remember, Larry, I put these graphs up of the increases in the money supply. And, now I used to say things to Arch Crawford. I said to him, do you remember when the market bottomed in December 74 at around 500? And now we get 500 points moves in one day. That was the old low back in 1974.
Yes.
And so nothing would surprise me, but as I've said many times, this pushing all this money into the system creates much, much longer moves up, but then these very wicked corrections, like you see that February, March. I mean, that was some drop. And was that 30% in a very short time? 30% constitutes a bear market. And so you could make the case, but we already had a bear market, February, March. And I always tell that old story about the crash in 87 when Arthur Merrill was around, the author of Behavior of Prices on Wall Street. And I said, hey, Art, I said, in determining a bear market, what's more important, price or time? Because could this 87 crash be a bear market? And he said, well, if I had to pick between price and time, I'd pick price. I said, so this could be a completed crash. And if you look back, that was a major low.
It
so
sure was.
Last March, that could have been a major low, and some people believe this. So that, in other words, this correction could be very short, but in terms of the timing, it should be over in the next couple of days. And if you move to the next graph, Larry, you'll see number 10. There you see that very accurate monthly cycle, and notice it just flattened. It just went flat, and you see the big drop, and now it is rising again with only another little flat spot in October. So maybe we could have an extension of this correction in the third week of October. And if you go to the next one, here's the 1-year cycle, the 4-year cycle, and the 10-year cycle. The 1 year is red, the 4 year is blue, and the 10-year is green. And below that, we see the composite, the addition of all of them. And note the big decline in September, and it bottoms around October 7th. So we could go 200 points lower somewhere between now and October, but that does not mean all stocks are going to do that. I think the technology will take the brunt of it, and I'm looking for bargains in other areas. The most recent stock I bought was Navistar, NAV, and I'm still holding it. Now, gold has not behaved in line with my short-term views, but you see June through September is the single most profitable time to own gold, as you can see from this histogram. And if you go down one more, there's the weekly gold cycle at the top, and it could be that led to the drop, and there's the monthly one at the bottom. And so they're both largely pointing up. We just had a real sharp shakeout, which surprised me, but I'm still holding because, as you'll notice, this monthly cycle does not top until November. Now, there have been more big moves down in the month of December than any other move because the seasonality tends to burn out at that point. So if you're a shorter-term trader, I'd be looking to sell in December or January, and December or November. But then we hit the week seasonality. See, if you go back up one to the bar chart, you'll notice there's that big move up in January. A lot of that is that enormous move we had in 1980. So it's actually less than that if you leave that one out. But you'll notice the weak seasonality then. January, it's usually lower at March, and then it rallies. And so the first half of the year isn't as bullish as the second half. So that's now you remember this, the Jupiter-Neptune effect on gold. And I pointed this out. And now this is the chart with the price, and you'll notice how I pointed this out the last time. You notice how it hit hit the high,
yep,
and it almost caught this low here. Well, it's occurring again due to retrograde movement, and there it is. So, in other words, this thing is going to repeat in October. Now, you see that peak that's around October 20th, 21st. Go down one more. That's the average gold performance in the month of October. And that peaks around the first week of October. So if you put these two together, I think we can expect a sharp gold correction in the second half of October. This will be the last Jupiter-Neptune square. There were 3 this year. And the one I caught on the nose, I had that on the show, if you remember. And the other market I like to trade, having spent so much time in the Middle East, is oil. And there's the oil. That is the oil monthly cycle, and it bottomed way back just in that April period. It's been rallying but running out of steam. And I have a small short position. I saw this coming in, and I said I better go short, because if you look at the seasonality, look at that. August, September, October, November, you're in the weakest period right now. So I would say the odds of higher oil prices are only around 20-25%, which means lower is 75 to 80%. So that is a very seasonal market. Now, bonds have not been following their cycle, but that's the annual histogram, and you'll note September is an average month. October is a bit stronger. Now, the bond cycle, here you see we have a buy signal coming up in just about 4 days. And so you've got this, the bonds pointing up in October on balance, and you got this bottoming. So it looks like we're going to have a bond rally, and bonds, I have to say, there are certain seasonal periods, I think you're probably aware of them, in March, June, September, when the market's been down like 75% in a week, and bonds have really not cracked in those periods, may have flattened out a little bit. So again, there's something, it's probably that large excess of liquidity that's been forced into the system that is distorting a lot of the natural cycles. Mm-hmm. So it looks like bonds, I've had an inverse position, which is at a slight loss, which I'm probably going to close out in the next few days unless something changes dramatically. And stocks, I'm holding on to selected stocks. I'm net short right now. Gold, I'm holding for the longer term, because I remember Abu Dhabi, my villa, the year 99, 2000. Felix Zulauf comes down from Zulauf Asset Management in Switzerland. And I said, the cycles here show there's going to be turbulence. He said, I agree. 2000, you're ending in a zero. We're probably going to have a bear market. And all that excess, the only thing these guys know in a crisis is print more money. We're having what does printing more money have to do with a virus? Essentially, you're just keeping, companies that should go bankrupt, they're just kept afloat. And you create zombie companies the way they did in Japan. And they think this is good because everyone out there thinks deflation is bad. I think I told you the time I went to the university in Vienna and I had a book in my bag, in defense of deflation, and I pulled it out, and you would think I pulled out a crucifix at a vampire convention. All these professors at the lunch table shrieked in horror. So, what are you reading that for? And the deflation to them is equivalent to depression, even though scholastic studies showed out of 20 deflations, only one led to a depression. So.
Can you stay with us? We have a few questions, Bill.
Sure. Yeah, I'll take the questions, and I have to go. Yeah.
You bet. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and we're talking with Bill Meridian, Cycles Research, and one of our listeners is asking a question, Bill. What do you think is the best trade over the next 30 days in any market?
Well, I like short oil.
Okay. I do too, but that sounds pretty good to me, you know. You know, it only made a 61% retracement of the whole down move, you know, after the $6 move we had back in February. So that's a pretty good sign too, I think. Are you hearing things from the folks in the Middle East? Are they worried about anything over there? I mean, you know, there's a lot of political things going on. Do they say share their views with you on what they see happening in the world?
I spoke to them about 6 weeks ago and haven't heard anything since. So no, I haven't heard anything new. I have to give them a call.
They usually, when the panic time comes, is when they knock on your door, that's for sure.
Yeah.
Okay, one other question that we have, and that is about the gold. Do you see gold anywhere near $3,000 an ounce in the near future, meaning 1 to 2 years?
Oh, I don't look out that far, but I think it's a sort of 2250, 2300 by January.
Okay, that's fair enough. And if they have vases for $7 million and
that's right,
$10,000 notes for $380,000,
right.
Yeah, it's not much. Now on that $10,000 note, that was Salmon P. Chase, wasn't it?
I don't recall. I was trying
to
read it, but I couldn't read it.
It was Salmon P. Chase because I used to follow that stuff quite a bit. I've never had a $10,000 note, of course, but I know what they are. If you've ever been to the old Binion's hotel at the Horseshoe Club, you know, he had $1 million there, and that's what was there with those $10,000 notes. He had 100 of those, and that's what lined up to be $1 million. He still has those, and you can imagine, wow, 100 of those, you're talking 30-some million dollars. Boy, that's a lot of money. Oh, my goodness. Okay, one other question, and then we'll let you go, Bill, and that is regarding the stock market, the fact that this, you've already mentioned it, but I think if you reiterate it again, the fact that we're only down such a small amount since the high that we made in January, I mean, to me, that seems like a relatively bullish sign.
I agree with you, Larry. Yep, that's exactly correct. Yep.
Okay, and the final question is there anything in the cards that'll say that who the primary election will be about come November 3rd?
I have to talk to you next time about that. So
how about we do it the day after the election? I'm pretty good at that too, you know.
Okay.
No, that's good, Bill. We'll have you on again.
I have to run. I've got a very busy day today.
I know you do, and I appreciate it. Thanks for being on, my friend. We'll have you on next month, and be safe, and we really appreciate what you bring to us.
Oh, thank you. Bye-bye.
Thank you. Bill Meridian, Cycles Research, folks. If you want any questions, you know, you can certainly ask him. He's very, very accommodative about his knowledge, and boy, he has knowledge. There's no question about that. The markets are still moving more or less in a tight trading range here between 32.37 and the low we made last night at 32.08. The NASDAQ, of course, is the pork bellies of the stock indices, and that one has been jumping around all over the map. Bill mentioned that, one of the things that he was looking at is probably maybe the best trade of looking at it, and this is one of the ones that we've been really harping on here in the 24/7 newsletter, and then also again in our newsletter, and that is if you take a look at this daily chart here on the crude oil, you see the bottom we made down there at $6 a barrel when that guy from that was back in February contract, which bottomed in April, but that was when the Singapore guy got into big trouble. We got up to the 61% retracement. We stayed there for 4 weeks, folks, at $44. Can you believe that? And then it breaks down to 35, and now we rallied back to 40. That was a 61% retracement. So as Bill was pointing out, that's the same thing he was looking at on his. Now, if this is correct, and we're looking at a simple ABCD pattern, you can see that the 382 brings you in at $30 a barrel. That's a good 20% from where we are right now. We're trading at $39.95. So those are just a few of the ones that he talked about that looks pretty interesting. You're certainly trading in a downtrend. Now, there's another one that's interesting here. You notice that high we made way back in January. That was when they were having all kinds of trouble with drones over there in Saudi Arabia. And, of course, that seemed like it was going to be bullish, and the market went from 66. Well, it went to 66 all the way down to 48. It rallied to a 382 retracement there at 55, and then went from 55 to $6. It actually went minus $27, which I don't think we'll probably see that again because they've changed the margins the way they work over there. But they had that guy trapped so bad they had to teach him a lesson, and they certainly did that. So those are just a couple of the things that we're paying attention to here this morning, and we'll see how they land up. Now, the euro, I still believe, folks, that we're in an area where we're looking at the euro going down, but right now we've backed off more than 500 pips from the high, and so we are in an area where the market is very overbought. Let's try that again, Larry. It was very oversold, and so we're due for a rally. Now, we did have a little bit of a rally last night when we got up to that 1.17 level, and now we're back down another 50 pips at 111.16 in the December future. So we're due for a rally, but I think it just be short-lived. We've been down 8 days in a row, which is statistically puts it in the outlier event that it looks like it could be where we should get a little bit of a rally. But we got a Friday in here, and with stocks weakening up again, especially in the NASDAQ, you notice the NASDAQ has given up almost all of its level. We're we're right at the 78% level in the NASDAQ right now at 10,840, and anything below that, I mean, you're looking pretty suspicious. The high that we made this morning, believe it or not, folks, I know you don't follow these Fibonacci numbers as much as I do, but if you notice here, I'm just going to bring this up here and show you the fact that the overnight high that we just made just about 30 minutes ago, that was nothing more than a 78% retracement of the move that we had from overnight. And what we've done now is we come down and we hit it again at 10,830. So it's bounced right between that. And if you looked at it real closely, and that's what we're going to do right now, just take a 2-minute chart and watch it, you're going to see that it's nothing more than that secret pattern that we use all the time, known as the ABCD pattern, and that's what's interesting about it. So, again, we want to thank our good friend over in Calabria, Italy, Enzo Giannica, to tell us about that secret pattern that he knows and loves so much. And we love you, Enzo. We wish you could see you more, buddy, especially Sarah. And me too. Anyway, I hope your mom is good and all the olives are great, but he's been a backer of ours and good friend for, 25 years, I believe, and we met him in New York way back, oh my gosh, long time ago. Okay, let's move on to the gold market. Folks, the number that we're waiting to see in the gold market is at let's try it again, 1845. The low so far has been 1852. We're now, this morning, we're trading at 1864. I believe that we've got a really good chance to get there. Remember, the silver went through the number we were looking at like it didn't even exist. And so we have to pay very, very close attention to these numbers. And with a Friday coming in here, I will be very reluctant to do anything until we see what happens on Sunday and Monday, because anything overnight would be very, very damaging to the pocketbook, because you can see that when silver went more than $1.50 an ounce below the 382, that is not a good sign, boys and girls. So we have to respect that and pay very, very close attention to those numbers. Remember, Bill was talking about the 382 number also, and that is another reasoning to pay attention with a smart guy like him.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We want to thank Bill Meridian for being our guest today, which is nice. We got a call from Florida. I'm sorry I didn't get this. Max, are you there?
Yeah, good morning, Larry.
Good morning. What can I do for you?
A quickie. Which gold contract will be trading come January?
January, December moves to February. Well, that's the way it used to be. I'm pretty sure that's the way it'll be. It'll be February. March is basically a non-event, but February and April are two major contracts to look at for the spring, for sure.
Okay, thank you.
And sometime in November, if you'll remind me, Max, we'll talk about the open interest. But right now, December is the lead dog, and then the next one would be February and then April. But I'm watching that, of course, just to see how things unfold.
Okay, thank you.
Hey, stay safe down there in Florida. We hear news that there's a lot of sick people, so you don't want to get involved with that, okay, my friend?
Yep, will do.
Okay, vote early and vote often.
Yep.
Okay. All right, folks. We'll take a quick look here at the NASDAQ. We went down and held at that 78% level down there at 108.30, rallied about 40 handles right now. The key level here to watch here is 109.40. If we get above 10,940, if we get above that, we've got a chance. But frankly, the bias is to the downside because we've got a concept of a whole lot of lower tops through here. And the key number in the S&P, of course, is that 3250 level, which is the 61% retracement of the previous day's high, 78% retracement of the previous high. Both the NASDAQ and the S&P last night, if you do your homework, both of them, all they did last night was rally up to the 78% level of the high of the intraday move on yesterday. And so these markets are still in a downtrend. And we made lower lows, of course, in the S&P today and then also in the NASDAQ. So that's telling us that the bias is still to the downside as we speak here. Regarding the gold, I'm still waiting on the gold. I believe we need to wait through the weekend just for the fact that we're so far below the 382 level in the silver and the fact that gold has not made the target of 1845 as of yet. So live every day in an attitude of gratitude and may God bless.